Now I'm going to introduce a panel that we've touched on somewhat during the day through other panels, but what you're looking at here are CEOs of publicly traded companies that are duly listed and trading. Let's say duly traded. Now, I'm going to introduce a person who is with B. Riley. Have you heard of B. Riley? It's a pretty large firm in Southern California. They're an investment banker, market maker, etc. And Becky runs with her team the division for sponsoring dual listing companies so that they not only trade in their home country, they trade in the US. She proceeds with the 15C211s. And without any further ado, should I call you Madam 15C211 or something? Ladies and gentlemen, Becky Popoff.
Thank you, Shelley. Hello, everybody. I'm Becky Popoff, and I'm a director with B. Riley Securities. We are a full-service investment bank based in Los Angeles and a proud sponsor of all SNN events. It is so great to be in person today. It's strange. My last event in person was actually in 2019 here in Vegas at the same event. So it's only fitting to be back here again today with all of you. I'm sure many can relate, but I've been moderating panels virtually for the past 2 years in sweatpants. So it's great to be here in person, all dressed up, not sitting behind a computer, face to face with our panelists. But all joking aside, I'm really excited to be hosting today's panel, which covers cross-border trading initiatives. I run, as Shelley said, the OTC advisory practice at B. Riley, where I work with issuers on a daily basis in establishing secondary trading on the OTC as the issuer's OTC sponsor. For those that are not aware, OTC Markets is an alternative trading platform which allows international issuers like our panelists who are public outside of the US to establish secondary trading on the OTC. OTC requires they work with a sponsor, and B. Riley fulfills that role. So without further ado, I'm really excited to have my panelists here today, all of whom I've worked with as their sponsor, one of which I'm currently working with in getting him officially trading. But everyone today is going to give you their story behind why they chose to establish cross-trading in the US. So without further ado, I'd love to introduce CEO Richard Kellam with Data Communications.
All right. Good afternoon. Good afternoon, everybody. And I guess we're just a quick introduction of myself.
Yeah.
About the company later,
Introduce
right?
yourself. You can introduce the company.
Cool. Okay. So my name's Richard, Canadian, live in Toronto. I have 37 years in the business. I've been with DCM. Now I'll tell you a little bit about DCM in a minute. I've been with DCM for just over a year. Started March 8th of last year. 36 years of my experience has been with large multinationals in the consumer goods space. Biggest chunk of my career with Mars Incorporated. You probably know them. They don't trade. They're a private company, about $40 billion in turnover. And I worked about 18 years outside Canada, US, India, Malaysia. Spent a big chunk of my time over in Germany as well. So that's a little bit about me. A little bit about DCM. We are a Canadian-based marketing communications services provider, about $230, $240 million in turnover. Pathetically undervalued at about $57 million. That's why we're here today, and that's in fact why we've taken this additional listing. And essentially, we provide essential marketing and workflow services to 70 of the top 100 corporations in Canada, and been around for about 64 years. I'll tell you a little bit more about the company after this introduction as well. And of course, we're in the exhibition hall, and we get in a lot more detail in terms of what we do. But we're essentially a marketing communications company that provides a lot of value in digital solutioning. Okay, so that's a little bit about me and a little bit about DCM.
Thank you, Richard. And you're public on the TSX in Canada, correct?
Yes, we are. We're on the TSX and just obviously recently listed.
Exactly, exactly. Okay, and now I would like to introduce CEO Azim Ranatula with Sabio Holdings Inc.
Cool. Thank you, Becky. And following Richard's no easy task here. So I'm Aziz Ranatula. I'm the founder CEO of Project More. I think that's what everyone's telling me. I'm the CEO, founder of Sabio Holdings. And what we do is I've spent a number of years in the media space. And essentially what we're doing is we're enabling CTV content. So we're enabling content on CTV streaming devices. We're monetizing that content. We're providing analytics for it. And so, all the things that you're hearing about Netflix, losses and erosion and people not paying for subscription, we're the answer for that. The solution for it, sorry. So that's pretty much us.
Perfect. Thank you so much, Aziz. And now I will hand it over to Stuart Crow, Chairman of Lake Resources.
Thanks, Becky. My name's Stuart Crow. I'm the Chairman of Lake Resources. Lake Resources is an Australian-listed lithium company. We've got four projects we're developing in Argentina, which is one of the two places where lithium is more prominent than anywhere else in the world. And my background is, the reason I've got grey hair and any hair at all left, 37 years in financial markets. From the sell side, I've also done corporate finance and run investor relations businesses. And I've been involved with Lake Resources as a founding shareholder 6 years ago. 8 guys met in a surf club over a beer and a steak and passed the hat around, and we raised $750,000 and sent Steve Prominence, who you'll see in the exhibition hall later. He's a little bit weary, he's just flown in this morning. Sent him off to Argentina with a satellite phone and a credit card. And we've now developed a project that we hope to have heading into production in the next 12 months. And we're rapidly bringing 3 other projects up the curve to help break the deficit in the supply of lithium that's rapidly growing the demand at the moment for electrification of the use in electrification of transport and storage of renewable energy. So it's been a great ride, and I'm a huge advocate for, as an Australian company, coming over and listing on an alternate market on the OTC. We started, as I said, we raised $750,000. We listed, we had a 15-20 million market cap 3 years ago, and currently we're running around $2 billion. So it's been a very, very successful transition for us, and can recommend it to everyone as a great opportunity.
Thank you so much. Okay, so to kick us off, I would really like to start with you, Richard. Congratulations, by the way. As you said, you just officially started trading on the QX a couple weeks ago. It was great working with you on that journey, and I can't wait to see what's to come. But my question for you is, I understand you joined DCM as CEO about a year ago, and you've led some significant changes to strategic focus and direction. Can you provide a brief overview of data communications management and what those changes mean for the future of the business?
Yeah, thanks, Becky. So as I referenced earlier, we're a marketing communication services company, been in Canada helping clients talk, 70 of the top 100 corporations across Canada for the last 64 years. Prior to joining the company, I actually consulted for about 4 months. And, the reason companies hire consultants is, sometimes companies don't know what they don't know, and they don't discover or know how to discover what they, may not know is in the company. One thing I discovered was that this company was more than just a printing or a marketing services company. They actually had some pretty fantastic digital capabilities. And those capabilities were built, kind of over the last 10 to 15 years, and they had to be built to optimize the workflow for clients, especially large, complex clients, right? Just help them simplify their complexity. So, but because the company was thinking like a marketing services or a printing company and not like a digital company, they were losing a lot of value in the market and, quite frankly, a lot of client value. So, better way to say it is there were more clients that were aware of our digital workflow capabilities or unaware rather than were aware. Okay, so about 30 to 35% of our revenue, about 35 currently of our revenue comes from what we call digital first optimization or digital first workflow. And the balance, that other kind of 65 to 70% is more kind of traditional workflow. So our strategy is clear, create more value to our client base by starting with a digital-first approach to managing their workflow, managing their marketing communications. So that's what I discovered. That's what I'm actually very excited about, and very much kind of leaning into as a company, and kind of driving that strategic agenda.
That's great. Thank you so much. And as I mentioned, all of our panelists are international issuers listed outside of the U.S., Canada, Australia, and some may not be aware, but international issuers have this ability to qualify for this foreign private exemption, which allows them to trade on the OTC. So they're establishing secondary trading, which everyone's goal is to obviously see more liquidity in your stock and really get that story out there. So that, again, really adds to the point of everybody's conversation today. And that really takes me over to Aziz, as you're unique in that you're a domestic issuer underneath a Canadian public company. So it allows you to still qualify as a foreign private issuer and establish secondary trading in the US. So my question for you is, how do you see the US financial market understanding your product differently than the Canadian market, since that's where you started trading first?
Thank you, Becky. And just to translate what Becky said, essentially what we did is we actually did a public offering in the Canadian market. We're a US company, US-based company, did a public offering in the Canadian market relative to doing traditional VC financing. And so that really is what we've done. And so now what we're going to do, because we are a US-based company that has had 2 straight years of EBITDA positive, adjusted EBITDA positive revenue, growing most recently last year at 87% growth rate. What we want to do is we want to come back to our actual, be able to have consumers and brands and the people who work with them actually be able to trade our stock in the US. Because we work with the top brands in the US. We work with the GMs, the Fords, the Wells Fargos. And so this is an opportunity for us to essentially come back and now have liquidity in our stock from the market that we actually operated in the US market. So 100% of our revenue comes from the US. Once again, the only reason we are now considered, we are a Canadian top company, but we're literally looking to do this transaction to allow us to have that additional liquidity in the US.
That's great. And as we talked about earlier, Aziz, you and I are currently working together
Sure.
on your US cross trade. So we are at the beginning of that process. We've created your US security, and now we're working to upgrade you to the QB. So that's great. We're almost there, and it'll be exciting to kind of see that come to fruition. And so now I'm going to take it over to Mr. Stu. It's great to have you here. I actually worked with you as your OTC sponsor in 2019.
Yeah.
And, it's been really great to see your story grow. And obviously, as you said, it being in the US market has really helped grow your story. So I would love to really hear and understand what it was that led Lake Resources to consider a dual quotation in the first place. And has it proven beneficial? And I think it has, but if you could give us the story behind that.
Yeah, most definitely, Becky, and thank you. And yeah, it's been great working with you. And I'd just like to acknowledge two guys in this room who it wouldn't have been possible for us to do what we did. And that's Shelley, you're a legend, you know that, and Rick Revlins. Thank you. You did a great job for us in assisting us, because it was so fortuitous. We were over here marketing, talking to American investors, and struggling to get any recognition. And we were finding it was really difficult for people who loved the story, probably just loved the management team probably more than the story, but they couldn't invest. And it was very difficult for US investors particularly to access the Australian market. So Shelley suggested I met Rick, and then from there we met you, and we've developed this process where we came across onto the OTC, and that was the catalyst for an amazing uplift in awareness of the company, and it gave liquidity and an opportunity for a much deeper pool of capital. Australia's a pretty small place. I mean, I was in California on the weekend. There's 39 million population. Australia's got 25 in total. It's very hard to think that you can generate the capital required to build probably what will end up being $4 billion projects in Argentina out of that capital market. So we had to access larger capital pools, and so it just made perfect sense to come across. And I have to say, the the way it worked and the success we've had, and there was a lot of work involved in that, and a lot of long haul flights. I've got to tell you, I got more frequent flight points than probably most people in this room. But anyway, it's been a great journey, and I can highly recommend it to anyone else thinking of doing it, because it's transformed our business from a struggling junior explorer into we're now on the verge of going into the ASX 200 index, which is quite remarkable, with a market cap of 2.3 billion that we're trading at the moment.
That's
So
great.
it's been great, so thank you.
Well, what would you say is the main thing you've noticed since 2019, obviously having a pandemic in between and you've still remained to grow?
Well, thankfully we had that listing up and running when the pandemic hit, so we could do a lot of Zoom calls, and we had all the connections and contacts in place. We used a lot of external service providers to help us spread the story through online media, social media channels and things like that, to sort of reinforce getting the story out, and that built the liquidity, which allowed us to raise the money to keep going. And that was one of the things during that period, particularly in the lithium market. For the last 2 years, I describe it as the valley of death. It was really difficult to raise the money to just keep going, and we'd sort of tapped out all our friends and family, and it was great to have those added investors there to go to that allowed us to just keep the momentum going, build the projects towards preliminary feasibility study, and then finally, as the market recovered, we were at that stage where we had data and we could line of sight to production, and then everything sort of took off from there. And the awareness of what was going on in the lithium sector and the deficits that had been looming finally became mainstream, and off we went.
Perfect.
Yeah, it's been cool.
Okay, now I'm going to jump back to you, Richard. How does your recent acceptance for trading on the OTCQX align with your strategic priority of a digital-first company?
Yeah, so great question. As you know, we just started trading a week ago, wasn't it?
2 weeks ago now.
2 weeks ago now. Wow, how quickly the time has gone. So look, we've been actively, telling our story. We've been a public company in Canada since 2004. As I said, we have this year just over 235 million in revenue, adjusted EBITDA just north of 30 million. Our real EBITDA in 2022, non-adjusted EBITDA will be 30 million. Our revenue will be kind of 240 to 250. So we're a real company, and we've got a real story to tell. We just need more people to listen to it. Hence this listing, and so we're very intentional and very active. Sort of dialed up our IR quite significantly in the last kind of 4 or 5 months, because we've got very good performance, we've got a great story to tell, and quite frankly, we think of ourselves as a startup with clients, because we've got an incredible client list with capabilities. We've got great digital and technology capabilities we've built for a number of years. As I said, there's more clients who are unaware of them than are aware of them, and with cash flow. So it's just a matter of getting out and actively not over promoting, but actually just telling the story we've got to tell, which is a great story.
And how do you think your U.S. audience will respond now that you're officially trading here in the U.S.?
I think they'll respond very well, because I can tell you my CFO may kill me for saying this, but I can tell you that just the digital story resonates much better in the U.S. than trying to kind of rebrand and tell that story in Canada. We're still known as kind of a conventional printing company in Canada. A lot of investors have no understanding, or not a clear understanding of what our true capabilities are, whereas we're starting fresh in the U.S., right? It's a new brand, not a rebrand in Canada. And we all know that rebranding is a lot more difficult than establishing new brands. So yeah, we're quite excited about it, and I know that there's already a lot of interest in our story and in our company.
That's great. Thank you. Okay, Aziz, AdTech is an area that has a lot of momentum in the financial markets. Why would your company be different, and how do you think your cross trade will help this?
Yeah, well, AdTech has been through that roller coaster ride of the world of roller coaster rides, and what we're doing is we're bringing to the marketplace, first of all, we are a US-based company, so that certainly will help our conversations. And when we come to events like this, I'm not flying across the country to get to Toronto to have these kind of conversations, although we have some great investors who are supporting us from Canada. It allows us to really get our message out. Number two, the biggest opportunity we see is cord cutting, streaming, the ending, what's happening in the streaming markets with Netflix. Consumers are getting out of their homes. They're looking at their bills. They're realizing they don't need to have Netflix, Disney Plus, Hulu, and all of these combined services. What they want is they want content. And so they want content for free. We're essentially being able to enable that, monetize it through working with brands that were here in the US. And so we feel like our story does resonate, and the current situation of what is happening is just the beginning. Cord cutting, cable cord cutting, and now subscription cutting. The combination of that is exactly what we're providing to the marketplace. And as people understand it a little bit more, they'll recognize it. It's not happening to as great of an extent in Canada. It is, but they're not recognizing it because you have like duopolies, you have the Rogers, you have here in the US, you're seeing a lot more of cord cutting, both subscription and cable cord cutting.
So what would you say the difference between your Canadian audience versus your US audience really is? What differentiates the two?
Well, I think that today, with the current environment, the Canadian audience is really focused in on the mineral situation. So if you're a mineral producer, they're really kind of, a lot of bets are focused there. They're not really thinking about technology as a whole. I think the US audience recognizes that cord cutting's going on. Anyone who has kids in their home, you ask them, have you watched cable TV in the last week or two? Have you watched your Hulu? And they'll say no. And so the recognition of what is happening from a market dynamic perspective. And then also on top of it, we are competing with peers who are in the US market that are trading at 4.5, 5x valuation, forward revenue. And we're at 1. So, there's a recognition that there's a real delta problem here. And so we think that as we get out to the marketplace, that is a real benefit to us. Because we compete with those companies, the Magnites, and there are direct arch rivals, and we literally beat deals against them. So we're competing with them on a regular basis, but yet the Canadian market doesn't really understand those companies, whereas the US market does. So that's it.
Okay, great, thank you. Okay, Stu, back over to you. As we know, you're an Australian-listed company. At what point did you go public in Australia, and how long did it take you to decide we need to get in front of the U.S. audience? Can you just give us a little bit of history on at what point all of this started to take fruition?
Yeah, sure. We went public in 2016, and we made the move onto the OTC in 2019, 2020. And the reason we did that, we're doing things a little bit differently in the lithium space. We're using a different form of extraction that's more efficient and far more sustainable. We deliver a really high purity product that no one's ever done in standard lithium extraction. So we can recover 2 to 3 times what a well-known company would do using evaporation ponds. And it's a really sustainable product. So there's a real move towards ESG focused product in the supply chain for electric vehicles, not just the batteries, but vegan leather seats and things like that. There's going to be an audited supply chain based around sustainability, and this product has that. Limited water usage, high purity, and one of the reasons to make the transition here, we used a technology partner out of California called Lilac Solutions as our partner on this first project. So it made sense. They're based in Oakland. They're backed by some of the big names in Silicon Valley, Breakthrough Energy, Bill Gates, the Engine Fund, T. Rowe, Chris Saka, the venture capitalist has just come on board. They're backed by BMW, Sumitomo, SK Innovations, the battery maker from Korea. So they've got a fantastic group of supporters there, and it just made sense for us to try and leverage off what they've got going. That was one of the reasons we came here, because of the awareness of the Lilac guys and what we were doing, and ultimately, and what we've just announced recently, an offtake with the Ford Motor Company. It made sense to use, brainpower and something clever out of California, backed by the billionaires of Silicon Valley, delivering product to Detroit. Sitting in Australia with that sort of pedigree, why would you not come here We just had to do it, and the end result has delivered way beyond what we had expected, to be honest. It's been great.
Congratulations. Okay, Richard, I understand you've been much more proactive in your investor relations and shareholder engagement this past year, as you stated earlier. Can you describe some of the things that you're doing differently, and how does the U.S. market play into that going forward, especially being a Canadian company like many other companies are here today?
Yeah, so, I said it earlier, by the way, Aziz, I'd love to be trading at one-time sales, so so that's an aspiration from mine. Yeah, so as I said earlier, look, I think somebody had a question about the percentage of SG&A that is invested into IR. Well, we don't invest 25% of SG&A into IR. By the way, we operate at NOG, negative overhead growth, but we certainly invest time. I invest my time. About 20% of my time is out talking to investors and actively telling our story and engaging in that story. By the way, we were hit with some pretty significant headwinds during COVID. So there's a tough story to tell during COVID. Remember, we're a marketing communication services company, and I know there was no COVID in the U.S., but there was in Canada, and essentially, everything was shut down, right? 25% of our business is done with managing workflows for financial institutions. Branches were closed across Canada. People weren't going into branches, so we got hit with some pretty significant headwinds, and kind of tough to deliver a message that was a challenging message to deliver. Thankfully, we're now into tailwinds, right? So we've got some really positive momentum. So we have a very good story to tell in terms of the clarity of strategy, the position we have in the marketplace, the tailwinds we're going to be now experiencing, the momentum we have with clients, and now it's about amplifying that through our new listing, right? Through talking to many investors, kind of here and south of the border. So we're quite excited, and as I said, early stage, but we're getting some good traction.
That's great.
Yeah.
And market awareness is so important. It's obviously why we're all here today. SNN is our number one group for market awareness, so it's important to get out there and tell your story. And it's something I'd like to touch on a little bit towards the end of the panel as well. Aziz, a simple question for you.
No simple question.
Or maybe it's complicated. I don't know.
I'll keep it short. We got 5 minutes left.
Tell us a little bit something about the name Sabio.
So Sabio means wiser experience, and the idea was the genesis of the company. For me, I'm born in India, raised in the U.S., and worked at companies like Fox, NBC, AT&T, Opera, the browser company. Worked at all of these companies, and what I recognized, along with being close to the Telemundo folks on the NBC side, was that no one really understood how to really reach the audience effectively. You can't have a guy by the name of Aziz Rahimtoola and expect to actually reach him based off of my name, based off of my ethnicity, based off of where I live or where I'm from. And so the genesis of Sabio is wiser, intelligent. We've always focused on the in-app idea, the idea of understanding a consumer from their app perspective. So initially, it was apps on mobile, and now it's apps on TV. We connect the dots, and we really sure, media is certainly something we do, and that has been a core business, but behind the media aspect of it has always been our analytics and our insights and the ability to really understand consumers. And so that really is where, so sorry, I took a little long. That's it.
That's great. And because I know we're coming close to our time here, I want to kind of wrap up with going back to the market awareness topic. What would you say, and each of you can jump in as you'd like, what would you say is your number one thing you want to be doing for market awareness? How do you plan to truly continue to get your story out there or start to get your story out there? What is the most important thing for you when it comes to market awareness here in the U.S.?
I'll go first. For us, it's news flow. It's just constantly keeping people up to date with what we're doing, progressing the project, de-risking the project because we're using something new. People thought we were mad 3 years ago. Now they're really fascinated because we're going to change the way lithium's extracted globally over time. So we just have to keep de-risking and keep the awareness of what we're doing and how we're progressing towards that. We use social a lot. Social media is a massive, and it's free. You know, you talk about 25% budgets and things. I spend half my life texting stuff on Twitter and LinkedIn and things, but I have to say, you know, I've made some phenomenal contacts through that, and we picked up massive investors because of it, because you build a profile. Lake Resources has probably got one of the largest Twitter followings of any lithium company on the planet, including Albemarle, Livent, Lithium Americas, and all the big guys, because we've just spent a lot of time spreading the word and keeping investors informed, and they respect that. And the other thing we've done is sort of really look after our shareholders along the way. We've done a lot of fundraising using our shareholders. We've raised probably $150 million out of the 220 million we've raised, or probably not even that, 200 million has come from shareholders. And we've done those through bonus issues and things where they've made good money on the way through by participating in those programs. So they love us, so they're really sticky. And if someone puts something negative on social media, it's a pile-on. They all come in and and get into them. It's great, and defending the stock. So it's worked really well. We've got a really core team of supporters out there.
Do you use your 5 kids to help you with your Twitter skills?
It's an acquired skill set. I didn't even know what Twitter was 7 years ago, but now I'm on it all the time.
You have your children to help you out.
I do,
with that, right?
absolutely.
Okay, good. How about you, Richard?
Yeah, you know, Becky, on our side, you know, a couple things. You know, I always think of, like, you know, I grew up in marketing, right? So I think of kind of brand marketing here. And one thing about building a brand is being understood, you know, having a clear strategy, obviously, being understood, and being remembered. So, look, what we're going to do is our strategy is clear. We've been out communicating strategy, and we'll communicate strategy and performance, because that's going to that's what's really going to deliver, you know, kind of a momentum in the marketplace for us is continued performance, and that's what you hear from me on a continued basis. You know, continued clarity of strategy and how are we performing against that strategy.
That's great. Thank you. Aziz, how about you?
Don't hold up happy hour, number one. Number two, sorry.
We're losing an audience, I think, to the happy
Okay,
hour.
all right. Number two is execute. Of the 3 companies here, we're the newest to this public market, you know, affair, and really what we're really focusing on, and quite honestly have not dedicated enough time on the social media and other aspects, because we just don't have it. We just execute. And that's really what we're going to do, is we're going to focus on the execution, and in time, as we get the story out and we show quarter after quarter after quarter of execution, people will wake up. And that's my strategy. That's what we're going to do, and we're really excited about it.
That's great. Well, as we're wrapping up, I just really want to thank the 3 of you for joining the panel today to discuss all things cross-border trading. It was a pleasure working with Richard and Stu on their cross-trade as your OTC sponsor. Sabio, we're still
In the
going.
mix.
We're moving strong. We're almost there.
Yeah.
But it really is an honor to be here today. Thank you, Shelley and Lulu and Robert. I love being back in person, and you know, cross-border trading is really so near and dear to my heart. It's what I do every day. So if anyone has any further questions, I'll be in the exhibitor hall tomorrow. If you have questions on cross trades, how it works, everything that goes into it, I can elaborate some more for you. We'll also have our panelists in the exhibitor hall, so please feel free to come up, ask us questions. Well, thank you so much, everybody. Look forward to seeing you throughout the rest of the conference.
Nice job.